let's clear that misconception up. So most people think when you buy ETF, you own small pieces of the companies inside the ETF. That is false. You're taking your money, you're putting it inside the ETF, you're investing in the fund takes your money and breaks it down into a percentage of each one of these stocks. You're investing in the fund and you're getting the fund to give you a return. All right, trappers, listen, I wanna show you how to diversify your portfolio while getting dividends and getting great returns. That's right, in this video today, we're gonna show my new investors how to diversify without taking all the risk, meaning have investments in different sectors of the market while getting the dividend, while not taking on as much risk as the average investor, because we won't do what? Save money. Listen, man, it's your boy, the Wall Street Trapper. Before we get into this video, I want you to like and subscribe. And for 2025, man, we're gonna help y'all build out some great portfolios. So one of the ways that you can diversify is by investing in ETFs, which is sweet. Well, the problem with that is when most people get ETFs, they're always like conflicting with one another, meaning they're overlapping. So you may buy the VTI and then you may buy the VOO, and it's actually 70% of the same stocks, and you don't want to do that. So today what I'm gonna teach you how to do is how to diversify. I'm gonna give you 4 ETFs that are separate in the way they perform. They're separate in the stocks they have inside of them. They also can give you great performance because we're gonna track the performance on them. And they also gonna give you some good dividends. And I know y'all like that cash flow. So listen, let's get into it, right? So our first ETF on the list is the energy ETF, ticker symbol XLE. Now, inside of this ETF, you will focus on the energy sector. So you're gonna have your Chevrons, you're gonna have your Exxons, you're gonna have your ConocoPhillips, you're gonna have those type of companies, right? Now, what I like about that is for my dividend people, you get a 3.36% dividend yield on this ETF, which means it pays out a 3.36% yield, not dividend, but the dividend yield, right? So the yield is the percentage of the stock price that they pay you in the form of a dividend. So you're gonna get that. Now, here's what I like about it, right? It still gave you a solid 10.636% return last year, right? Which is not bad. It did underperform the market, but remember, it's an ETF. You took on less risk. You got a whole bunch of stocks. You got a piece of ownership inside of the fund. Let's clear that misconception up. So most people think when you buy ETF, you own small pieces of the companies inside the ETF. That is false. You're taking your money, you're putting it inside the ETF, you're investing in the fund takes your money and breaks it down into a percentage of each one of these stocks. You're investing in the fund and you're getting the fund to give you a return. So I want to clear that up for y'all, right? So this ETF gave us a return of 10.63% last year. Not bad. We like that for not taking on a lot of risk. I'm not mad at it. Our next one on the list, ooh, I know y'all like that. Our next one on the list, we're going to go with the super dividend ETF. Now check this out. It's a super dividend ETF. It's by Global X. So another thing I'm going to do is point out who is making the actual ETF. So what's the fund is? So it's Global X Fund. It's the super dividend ETF, ticker symbol DIV. Now watch this. They pay a dividend of 5.67%. Sheesh! That's massive. That's a massive dividend. So anytime you can get you a dividend that's above 2% or better, you got you something real sweet. To get that from an ETF is really good. So usually you'll get that from like some type of, either it's a strong company that's been paying dividend for a long time, or to be like a REIT. A REIT will pay you that. A real estate investment trust will pay you 5%. What I don't like about a real estate investment trust paying you 5% is because most real estate investment trusts don't have good fundamentals. And y'all know we are fundamental specialists over here, right? But this one, it has Procter and Gamble in it. It has Philip Morrison in it. It has Kinder Morgan in it. It has AT&T in it, which I'm not really a fan of by itself, but because it's combined with some other stocks, I'm okay with it, right? The fund has these dividend companies combined, and then they're paying you the dividend. So I love the idea of that. Now, what they're doing is the fund is getting the dividends from all these companies, and then they're distributing it out to us, and then you are paying them. I should have put the expense ratios on here. That's what I should have done too to give y'all that. So that's side number 2 one. And they're not in no specific order, right? They're not in no specific order. Number 3 on our list, we're going to go with the wide moat ETF. This one is supplied by Van Exel, right? Ticker symbol MOAT. Ticker symbol MOAT. Now, here's what I want you to know. So as trappers, what we love is companies with strong moats. Now, a strong moat is a company that has a strong competitive advantage. This means that this company has a great way of fighting off its competitors and being a staple in that sector, right? A company can also have multiple moats, right? A company can have like a branding moat, it can have a pricing power moat, it can have a network effect moat. We're gonna actually do a video on moats. I'm gonna make sure I write that down for us, right? So watch this. This one, the ticker symbol is MOAT, 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 right? It pays a 0.75% yield, which is 0.75%, not bad, but you're not buying this ETF for the moat. You're actually buying this ETF for the performance, right? Inside of this one, let me say something too. This ETF performed 10% last year as well, gave us a return of 10% last year, which is solid for an ETF. But also it has Alphabet, it has Bristol Myers, it has Boeing inside of it. So it has some solid companies inside of this. I'm not mad at this, right? So if you're looking for a fund, a group of stocks that's gonna give us protection, that's what we want, that protection. So think about it. The energy ETF gave us 10%. The super dividend ETF gave us 6%. This ETF gives us 10%. Now, let me show you I'm going to say something real dope at the interview that I want you to catch when I say this, right? So the next one on our list is our small cap ETF. Now, let me tell you why I like this one, right? So we got boring with energy. We got boring with super dividend. We got a little action when we got wide moat because we went Alphabet. We got some of that in there. Now we're going to go to this small cap. Now, the small cap, what this is going to do inside our portfolio is the small cap going to give us that action. The small cap, some of y'all like the thrill. The thrill is gone. Some of y'all like the thrill. That's what the small cap ETF is going to give you. This is by Charles Schwab, the small cap ETF, ticker symbol SCHA. Watch this. It has a dividend yield of 1.41%. Not bad when you invest in the small caps. Remember, you're not getting this for the dividend. Watch what you're getting it for. Last year, it gave a 13%. 2024, it gave a 13% return. That is sweet for a dividend, for an ETF. Now, watch this. Along with that, you got Affirm, you got Reddit. So you got some of these high-profile, small-cap stocks that's moving in large swings. And the reason why I did this one last is because you have some of the most volatile stocks in here combined as one, and you get to reap the benefits of this. So that's what I like. So you getting action with your small caps, which means you get that thrill. It ain't all boring. Like, I'm gonna be real with you, I'm not the person that believes that stock investing should be boring. I think it should be fun. I think it should be exciting. I think when you see your money growing, you should be excited. I think you see you losing a little money, you should be a little like, I like all the emotions that come with the game. I like when people like, get your emotions out of the game. I'm like, no, I need them. That's what make the game fun, right? The game is fun because I get emotional sometimes. But I don't go so emotional, I go to throwing my phone and all that. But loving the thrill and the roller coaster, I love it. So that's what this gives you. Now, here's my lick to this. You got 4 different ETFs that perform 4 different ways. You got the energy ETF, you got the the dividend ETF, you got the moat ETF, and you got the small cap ETF. I'm not mad at that. Now here's what I would do. I will go find 2 stocks that you like that complements these. So I would throw like an NVIDIA in there. Or if you don't like NVIDIA, AVGO or ANET. right? I would like something like that that's gonna help me out, right? Or I'll partner it with something, with my second one will be something like CrowdStrike, Palantir, right? Costco, right? I'll partner it. Like I will partner these four with with two stocks. So now you got a 6-position portfolio. You got 4 ETFs and you got 2 stocks that's gonna push it. So now you get the individual of this. So I'm going NVIDIA, AVG, or AIM. I'm going CrowdStrike, Palantir, Costco, or I even go something like Goldman Sachs. Come on. Come on. Right? So now you got you got safety here, and you got your drivers here. Let's go, man. Listen, I hope you liked this video. I hope you enjoyed this video. The goal was to help you diversify, but not go crazy. So you can get your diversification from your ETFs, and then you push it with 1 or 2 individual stocks. Now you got a portfolio that's ready to outperform, man. Listen, man, it's your boy, the Wall Street Trapper. Listen, make sure you like, make sure you subscribe to the channel. Also get in the comments, man, and tell us how can we help you a little bit more. Let me say this, though. That's not me telling you go to WhatsApp. That's not me telling you about Bitcoin. I don't got nothing against it, but it's not me telling you to go to another app so I can be your, that ain't me, y'all. Right? They got a lot of people that be faking the funk. The scam thing is crazy. It ain't me, y'all. So listen, make sure you check out our show each and every Tuesday at 7 p.m. It's called Trapping Tuesdays on the Wall Street Look Like Us Now Network. It's on our other network page, man. It's your boy, the Wall Street Trapper. Salute.